Welcome back. Now, strong volume growth and improved operating margins have given Tiger Brands a boost. The food manufacturer reported a 31% jump in annual headline earnings per share from continuing operations, and shareholders reap the benefits, of course, in a final dividend declaration of over 12 Rand, along with a second special dividend of more than 27 Rand. Tjaart Kruger, CEO of Tiger Brands, joins us to digest this performance. Hi, Tjaart. Good to have you with Business Lunch. I mean, these are really good results. What's been driving this?
Good afternoon, Ray. Thank you very much for the opportunity. I think the biggest contributor to this performance is a very clear strategy, and I focus on executing on that, with emphasis on the second part, the execution bit. The team have really executed against that strategy over the last 18 months.
Yeah. What is that strategy? I know you've been looking at branding. I remember, I think 25 years ago, you used to be Tiger Oats, you became Tiger Brands. You're still looking at that brand, aren't you?
Yeah, we are Tiger Brands. We've got a history of more than 100 years, and we're very proud of that. I think what we've done this morning, as you've seen, we've changed the logo, not to get rid of the history, but to actually capture the history, but take it into the future, and making it a bit more modern and something that we can work with in a better way. That brand stands for many things. It stands for agility. It stands for, we've got a great history, we've got great people, we're confident, we're not arrogant, and we can execute. If you look at the strategy in a line or two, what's really been over the last 2 years is that we've got the best brands in the categories where we play, but we became too expensive for our consumers. Our consumers can't really afford our brands anymore. And the consumer that's under pressure to shop down if he has to. So what we've done is repositioned our brands from a cost point of view, and the only way to do that is to actually take cost out of the organization. So we were successful, and that's where that volume growth is coming from. To get our price points right, get our promotional activity right, get our positioning right, and improve our margins. And that, you can imagine, that took a bit of work.
Yeah, I would think so, because we are living in very tough economic times. Have you also, you seem to have also got rid of non-core assets. You've become leaner yourselves, not the consumer, you've become leaner.
No, certainly. We said 2 years ago that we can't be all things to all people. We can't play in all these multiple categories, subcategories, niche positions, and try to be efficient. So we've decided that we've got too many SKUs, the stock counting units. We cut about 27% of our SKUs. And on top of that, we disinvested in a couple of businesses. As you've seen, Karotsi, we sold Karotsi. We're busy in the process with Chococam. We've sold the Randfontein site. That process is very close to completion. Just to get the business back into what we call focus on 16 mega brands, drive scale and affordability, and have those products to be available. And that in a short sentence is what we're trying to do and what we are busy doing.
We've spoken about how you're getting leaner, that's one thing, but how are you growing now? Because you're looking for green shoots, you're looking for other market areas. What are you looking at?
The big thing, maybe I must just add quickly from a strategy point of view, the biggest change in our ability to execute was to change the operating model of the organization, and that we've done quite successfully. A look at growth going forward, I think if you look at what's left in Tiger, we've got huge opportunities in all of those businesses to grow into the future and grow through growing market share, because we've lost some market share in some of those areas, but also to innovate in those categories. We've got opportunities in all of them to innovate into adjacencies. I mean, Jungle is a good example. We can innovate into breakfast solutions, which we're only in hot oats. So as an example, so lots of opportunities. I also think we're getting towards the point where we must start looking at our portfolios. We've got 5 businesses. If you look at the categories, probably 7, 8 categories that we play in, and what are the opportunities in adjacent categories that we're not in, and whether we go in their greenfields or do acquisitions, that's probably something for the future, but we're certainly not blind to that.
Yeah. Tell us about milling and bakery. I can see you've made a bit of a profit there, and it's been a bit of a good news story for you.
Yeah, the big thing that we had to do is to get our bakeries back on track. I think our bakeries fell behind a little bit. The bakery category is an extremely attractive category, but highly competitive. And you really need to know what you're doing to make that successful. It's hard work. A simple example is a bakery driver starts working at 3 in the morning, every morning, 6 days a week. So it's a tough business, but if you get it right, it's a very, very rewarding and profitable business. And we're on that journey. We fixed our general trade business. We made our bakeries more efficient. And then on top of that, we will launch or start up the new super bakery towards the end of next year, probably October, November next year. And that will step change the organization's cost base. But until we get there, we are just busy chipping away at making the bakeries more efficient. And obviously coming off quite a low base, so the recovery looks good, which it is. And then combined with milling, which is wheat milling, which is of our wheat mills, probably 50% of the flour out of our wheat mills goes into the bakeries, and that's why we put the two together.
Yeah.
So very exciting. It's highly focused on the bakeries, and we've got very exciting stuff coming in the bakeries.
Yeah, interesting stuff. Tjaart, thank you so much, and congratulations once again. Really do appreciate you taking the time to chat to us on Business Lunch. Thank you. That was Tjaart Kruger, CEO of Tiger Brands.